All right, time for our daily quick cap here. Let's take a look at ticker symbol MSFT. And yes, that is Microsoft. Take a look at this trade. Turned out to be a pretty good one for us. Came up on the scanners the end of this day right here. And when I first pulled it up, immediately we can see that it's not a perfect river to valley setup, but this was what I classified and I had written down as a river to valley setup. And as a side note, let me go ahead and say if anything I say confuses you or you're unsure, it's not clear to you, I strongly suggest and strongly encourage you to go check out armortrades.com and see what I have to offer there. And because a lot of this, everything will make sense, especially if you take the Income Genesis course. But you definitely don't have to. Just wanted to throw that out there in case you're wondering what any of these terms or phrases that I say actually mean. So for me, this was a river to valley setup. It was nice and easy to see. It wasn't perfect. However, we'll go ahead and zoom in because, well, when we look left for horizontal support, after we define that it is a river to valley setup, I need to look left, try to find some support, or in this case, I'm really looking for resistance. And if I put my horizontal cursor, right there, I can't, there's not really a whole, there's a little bit, but not a lot. Let me just leave it still. Yeah, see, there's a little bit, there's a few places, but there's really nothing in the way of horizontal resistance. However, and none of this ended up being relevant, none of this through here. But if we were to zoom in and draw this trend line right there, we can see what's happened. That it has hit, zoom out a little bit. There we go. We are doing pretty well on hitting that trend line. I mean, it hit it right at it, right to the T, hit that trend line and started rejecting. So that is what really kind of gave me the conviction. Also, with this being a river to valley setup that wasn't, textbook, it wasn't perfect. I really looked at it and I, convinced myself, told myself this was a good trade and the reason, or would have been a good trade to take, or excuse, this was going to be a good trade to take if it triggered, because if it triggered, it would have to push below this area right here, which means after this break above the 50 SMA, it would then have to re-break below it by a decent margin, and do what we think it would do, which is continue lower. So I did like this one, and that pretty much covers it on the technical side as far as why I chose it, why I put it on the watch list, and eventually why I traded this one. So it looked good. Everything about it looked good. The technical analysis set up right. It had the right setup, river to valley. We just needed it to trigger, and it did. So the trigger here, we needed to see a break of 259.07. What that means when I say a break of that is up here. I need to see it print 259.06. That would mean that our trigger price is broken, and that is basically our cue to click that send button on our entry, or on our entry order, and sell, go short here. So all of that, everything up to this point is given in the war room each and every morning at armortrades.com, where I go over, why it's on the watch list. I go over the technical analysis side of it, and the trigger is, or as far as the entry point, all of that is set in stone. There's no ifs, ands, or buts about it. So then the only thing you end up having to decide is when to exit. When to exit. When do you want to take profit? So let's get into that real quick. And I always go over three different, excuse me, three different exit strategies. These are not the only three. These are just three to give you an example, give you an idea, kind of get your feet wet, let you realize and figure out what you might like to do and what the way you might like to trade. So the first one we always go over is scaling out into previous support or resistance. And pause real quick. I have been taking a lot longer on my past videos on explaining the exits because I don't believe that enough people do it. We focus too much on how beautiful the chart is and breaking it down and trying to sound smart by drawing lines of support and resistance, drawing Fibonacci sequences and stuff. Yeah, that's fine and dandy, but that's my one of my biggest problems as a young trader was not exiting at the right time. And you're never going to always exit at the right time. What you need to be able to do is exit at a consistent time where you don't have to second guess, like, am I making the right decision? Because the truth is that sometimes, no, you're not making the right decision. But that's the nature of the beast when it comes to trading. So I have spent a lot of time and a lot of focus, a lot of energy on the exit strategies. And I'm going to kind of start dialing it back to shorten the length of these videos. And I don't think that it's as necessary anymore. If you need more, if you want more information or me to go more in depth on exit strategies, feel free to watch some of the uh, older videos. And I do go in pretty in depth with it, I believe, anyways. As quick, I go in depth with it for it to be a quick trade review on YouTube. So with that said, let's move on. First one we go over is scaling out into previous support or resistance. Now on this one, the first area, and you always want to try to find more recent areas. That's why I'm staying zoomed in, because on something like that, just the more recent it is, the more people are going to see it and believe it's real. So for me, it was right here, 257.03 was the first area, simply because it's kind of an obvious spot in that it was the low of this day, and it's a after a really long wick, and it just kind of stands out. After a little push up, that level right there kind of stood out. Let me move my cursor, and maybe you can see what I mean if now that you're looking at it. It just stands out a little bit. So 257.03 was the first area that I recommended scaling out or exiting completely, taking profit, and price got down to 256.81. So it did reach that level and then some. There's no point in really getting into too much more than that, other than I'll just say, if you choose to scale or to exit completely, that is perfectly fine. That's your decision. That's a recent area of support and resistance that you could take profit at. If you wanted to move past that, you could have held maybe to right in there, even where you see these kind of a low right there, right around the 254.60 area ish, somewhere in there, or even right around the 253 area. That would have been a really good one to hold and see if you could get it. Try to capture that. But when that happens, you scale out. If you're scaling out, take that first trade off, take that first exit off, and then hold it and see if it gets triggered or not triggered. See if your next level gets met. If not, have your stop moved up so that you make sure you're definitely not going to lose money on the trade. All right, so another way to exit these trades is to, when it triggers, you enter the trade, and then you set your stop, which is also gone over in the war room each morning. You set your stop, and then you just let it ride throughout the day, and whatever happens, happens, and you just adjust your stop. Maybe, if price were to, now on this one, I never adjusted my stop, and this is the strategy that I used to trade it. But if it had, dropped down, let's say even down here around the 255 area, and probably could have moved my stop up closer to my entry. So that way, if it does end up reversing or, news breaks or something like that, and it ends up shooting up, that I will have protected myself a little bit. Won't have to worry about getting that max loss. And then you just close at the end of the day. For me, let's see, 259. I think, where did I get in at? I think it was right at like 259, like right at 259. um, because of the spread and everything. It was right around 259, anyways. Regardless, it wasn't that far off of the trigger, and you can see we closed at 258.83. So I got like, what is it, like 20 in between 17 and probably 23 cents, somewhere in there. That's what I got on the trade. So nothing huge, but I'm happy with it. I'm happy with a green trade. Would have worked out pretty good. Uh, Not well, I shouldn't say pretty good. It worked out. It was a green trade. It was a small green trade. Got like 20 cents on it, 20-ish cents, somewhere in there. So I'm not going to complain about it. Uh, I'm happy with it. Now the other option to exit is scalping, and that happened pretty well. We see right here at 9:40. This is when it triggered 259.07, right in that area right there. So it triggered, and then over the next couple minutes, it tried to pop up, but the highest it ever got was at 259.42. So it didn't even make it. What's that? It was 35 cents against you, and then immediately, boom. I mean, that next minute, 257, not then 9. I mean, that's quite the drop. That's over a point in that one candle on Microsoft, and then it just proceeded to go lower and lower over the next few minutes. So scalping it, meaning you're wanting to get in and out fairly quickly, would have been really good. Would have been a really good trade. You just got to remember to always make sure you have a good solid stop set in place so that you are in control of your risk. So that about wraps it up for this one. Remember, technical analysis is king. And yes, even though this was a river to valley setup, I could see that when I pulled it up on the scanners. We still need to see a technically based reason for why the chart is moving the way it is moving. And we had that on this one, and we felt confident in taking the trade. So I hope you enjoyed this video. If you did, please like, share, and subscribe. I would greatly appreciate it, and God bless.